The widespread use of electric vehicles has greatly improved today's highways. As a result, several manufacturers and makers of electric vehicles, EVs, are constantly vying to be among the best on the market. Welcome back to Everything, Everyone, and hello. Despite fierce industry competition, Tesla stock Tesla is reputed to be the king of the electric vehicle sector, and the business is still deserving of the title today. How come? Well, the answer is straightforward. Tesla has a unique net profit model. In the entire automobile sector, nothing comes close to this tech titan's profit margin. We're about to discover why Tesla is still ahead of the competition. But before we do, if you enjoy this kind of content, don't forget to like, subscribe, and press the bell notification button to keep informed about everything Tesla related. According to statistics, it is obvious that Tesla has long led the EV market in the US. The company has been consistently boosting the output of EVs, while other manufacturers of electric vehicles are still scrambling to produce vehicles and structures that comply with regulations. According to reports from 2020, Tesla has 79 newly registered electric vehicles in the US. According to a research from 2021, the corporation held 69.95% of the EV market share nationwide. In the first half of 2022, it still managed to buy 68 battery electric vehicles in the US. This demonstrates how quickly Tesla vehicles have mastered the highways, which may imply that Tesla is the main player in the US EV market. Due to the company's exceptional manufacturing efficiency, Tesla continues to lead the field. Most Tesla fans will concur with this because well-known supply chain problems and growing expenses are just two of the variables that have had an impact on Tesla's production performance. However, despite these challenges, Tesla reported an operating profit of 19.2% for the first quarter of the year, a major improvement over the committee's operating margin of 14.7% from the fourth quarter of the previous year. Currently, a number of elements continue to have an ongoing impact on the production efficiency of the EV industry. According to the Ken era, the cost of batteries is significant. Compared to its closest competitors in the sector, Tesla pays 10 less to produce battery packs, but even at this rate, the automaker still incurs significant costs on those batteries. Although technically battery packs are the most expensive component of an electric vehicle, it is clear from Tesla's significant cost advantage that they are far ahead of the competition, and Cairns predicts that this advantage will continue through the end of the decade. Now you might be wondering what increases Tesla's manufacturing efficiency. The solutions are found in its highly automated factories, which also have strong pricing power. All of these elements played a significant role in the phenomenal financial performance of the business last year. Tesla's revenue increased by 73% to around $62.2 billion, while its free cash flow skyrocketed by 118% to reach $6.9 billion. The majority of Tesla's ambitions are likely triggers that will support the company's continued leadership in the sector. In the upcoming years, projects like the launch of the eagerly anticipated Cybertruck, which is probably going to happen in 2019, and an increase in car production at the Gigafactories in Texas and Berlin will cause Tesla's price to surge. Tesla had an industry-leading 14.4% market share in electric car sales last year, despite the fact that the company's market share has been steadily declining. The operational margin of the automaker also offers a cost advantage in cutting-edge technologies like the 46A battery cell with ongoing improvement. Tesla has the potential to advance transportation and consequently boost revenue. Tesla intends to produce self-driving vehicles in the near future. The automaker intends to introduce an autonomous ride-hailing service that, in the future, will rank among the best automotive systems on the road. 8 exterior cameras were operated by hardware, and they were mostly used to sell driving data to the audience. In one of Tesla's earnings calls in 2019, a bespoke semiconductor that would power the FSD software in Tesla vehicles made its debut. According to Musk, the FSD platform will likely move beyond the human driver. He revealed his intentions for Tesla's robotaxi by year's end. Fleet the vehicle, which will show off its independence and affordable transportation. An automated ride-hailing survey at Switch, which the automaker is aiming for in connection to this asset manager, is now one step closer thanks to a recent announcement from Tesla that it expects to reach volume production of the robotaxi by 2024. According to ARK Investment, Tesla's autonomous ride-hailing services could increase the company's yearly profits by $2 trillion by 2030. If they do succeed, Tesla will unquestionably command the market potential. Autonomous robots are another upcoming invention for Tesla. It is no secret that Tesla wants to apply its skills in artificial intelligence to autonomous robots. In fact, the public first met its humanoid robot, Optimus, a year ago. The manufacturer claims that the robot can do monotonous duties, and a prototype will be released later this year. The Optimus project may appear serious right now, but it's a solid base from which Tesla can continually develop cutting-edge advancements. What impact would Musk's prediction that the Optimus will ultimately be worth more than the auto industry and full self-driving have on Tesla's stock price? Musk stated during the company's most recent earnings call, "Tesla is undoubtedly one of the most contentious businesses with exceptional market prices. As the market leader in UICVs, investors and potential investors are closely monitoring the company's current worth. Tesla's dominance in the market is further explained by the fact that it is worth more than the combined value of the next 14 automakers. Although we can't dispute that some investors do believe Tesla is now overvalued, its price-to-sales ratio of 19 is roughly similar in valuation to that of a software firm, which is why most of its supporters predict that Tesla will be a far greater service than just a car company. Historically, when Apple's market cap was $60 billion back in 2006, some observers once claimed that the company was overvalued. It unveiled the first iPhone a year later, and today, with a $2.6 trillion empire, the firm is one of the biggest in the world. When Amazon was valued at $76 billion, a big difference from its present $1.4 trillion valuation, Fortune magazine previously claimed that it trades at a price that well transcends any notion of truth. This is not to say that Tesla is on the range of valuation of these companies, but there is still a possibility of it being overvalued. However, there is no disputing the fact that Tesla incorporates its technological expertise into those vehicles, and this may be the company's ticket for immeasurable success in the future in terms of competition. There is no news that the competition in the EV industry is heating up, but with several alternative manufacturers constantly trying to produce efficient electric vehicles that will match Tesla's EV performance well. We've got one of these right here by it. However, the car company released various new models, and its earnings are continuously escalating alongside its production figures, and it's still nowhere near Tesla in terms of manufacturing volume production models, profit prices, and much more. While it may be believed that people buy electric vehicles just because they want one, the truth is that there's massive adoption of electric vehicles in the market, and that's because people actually want Tesla. The automaker has actually been able to establish a solid foundation for its brand, and because of Tesla, most people prefer to appreciate EVs. This is one of Tesla's most important advantages, and if it keeps delivering great market results, it will continue to rule the EV sector. Do you still think Tesla is the leader in the EV market? Will the automaker continue to hold the top spot in the ensuing 2 years? Share your thoughts in the comments section below, and if you want to learn more about what Tesla has been up to lately, click on the video that appears on your screen. We'll see you there.